Do you envision yourself retiring early and living a luxurious, comfortable life throughout your elder years? Despite fierce competition and market difficulties, Tesla has released its fourth quarter financial results, giving investors even more reasons to consider purchasing the shares. Despite the opinion of some experts that investing in the company's stock could be the means of realizing their dreams. If individuals are wondering about the possible advantages of investing in Tesla and placing their trust in the big boss, it makes sense that they would be feeling upbeat, given that the company's reported earnings above analyst projections and that its shares had increased by more than 50% from the previous month. Elon Musk continues to watch this video, but before we do, please hit the like and subscribe buttons. Do you believe that investing in Tesla stock will let you retire early? Despite the advice that investors shouldn't get too caught up in quarterly reports, experts say you shouldn't pass up on Tesla stock, one of the hottest growth companies of the moment, because so many people had expressed optimism about the possibility of retiring early thanks to an investment in Tesla stock. Many do so because, despite the companies confronting increasing competition and other market issues, they are unable to help create trends or confirm or refute the opinions of stock experts over a company's future. Tesla's third quarter financial figures have given investors even more incentive to think about buying the stock. Compared to the 99 cents per share that analysts polled by Reuters expected the firm would post, Tesla's reported earnings were around $1.05 per share. Revenue during the third quarter of 2022 was $21.45 billion as opposed to the analysts' projected revenue of $21.96 billion. The net income gap for Tesla was $3.33 billion, and the car industry's gross margins stayed at 27.9% from the previous quarter. In the same time frame the previous year, Tesla made $1.62 billion, compared to nothing the year before. The automaker's operating free cash flow hit a new high of $21 billion, with $3.3 billion in the latest quarter. Given that Tesla shares have risen by more than 50% in the past month, investors are feeling more confident that their investment in the company will enable them to retire early. During the scheduled results conference, Tesla executives answered a wide range of queries, including topics such as macroeconomic and economic issues, as well as CEO Elon Musk's impending takeover of Twitter. By 2021, your money would have almost tripled if you had invested $1,000 in Tesla in 2020, when the stock was just slightly more than $400 per share. Your return would have been considerably higher if you'd have traveled back a few years to November 2, 2016, when Tesla was trading for between $30 and $8 per share. The Cybertruck and Tesla Simming releases have been revealed by the corporation. According to the stock's price climb from 5.74 cents to 12.29 throughout the years, investing $1,000 in Tesla in November 2011 would be worth nearly $200,000 today. However, Tesla has been evasive about when they entered the market, a return of more than 20,000%. In contrast, investing the same funds in the S&P 500 would have only produced 357%, which is still a respectable return, but nothing in comparison to Tesla's return. While it is true that the Nasdaq owns all the stocks in the S&P 500, automatically diversifying it, most experts, including renowned investor Warren Buffett, believe the Nasdaq is a better place for most people to put their money. It is also true that most people agree that Tesla has established a name for itself in the industry, and the EV manufacturer's recent success suggests it will continue to prosper. World went to one-day cash in their shares of Tesla stock and retired comfortably. To retire comfortably in a Western country like the UK or the United States, one will require at least $4,100 per month, with immediate retirement income in the U.S. being around $47,000. In the meantime, those who reside abroad likely already made plans to retire elsewhere, perhaps somewhere like Panama or Mexico, where they can get by on much less than their golden years. However, if you rather stay in your current country and need at least $4,000 per month to retire comfortably, and you want to retire by the year 2030, the minimum amount needed should be increased to around $50,000 using a standard 5% withdrawal rate to account for inflation. If you want to retire with $50,000 a year and spend just 5% of your retirement savings each year, you'll need at least $1 million, and you'll have to stop working for at least 20 years before you run out of money if you don't do anything else to increase your income. It sounds like a lot, but with Tesla experiencing stratospheric growth year in year out, this could be within reach for savvy Tesla investors. Why should we believe that Tesla will keep raking in these returns? Let's listen to two distinct specialists. Renowned investor and CEO of ARK Investment Management, Cathie Wood, is a big fan of Elon Musk, the man behind Tesla. ARK Funds acquired and 6,663 Tesla shares for a total of $105.4 million in January alone. With Precise Sciences and Zoom Video Communications as the two largest holdings in her flagship ARC Innovation ETF, Tesla comes in third. Over the course of the last year, worries about supply and demand caused Tesla's stock price to decline. What aspects of the company's future seem promising? If autonomous cars become more common, she projects that the stock price of electric vehicles alone may climb 5 times over the next 5 years, or 13 times the current price. She thinks Tesla will thrive because of its aggressive pricing strategy. She claimed that since Tesla has the lowest cost structure and is leading the way in innovation, it cannot afford to do this. The other automakers will be forced to follow these price reductions, but it will severely harm their margins and profitability. Almost 5,000 investors and media representatives flocked at the Metropolitan Opera House in New York City to attend the annual investment conference, hosted by billionaire money manager Ron Barron, despite a challenging year for him in the U.S. stock market. Despite Tesla's difficult start to the year, an on-stage interview with Elon Musk was one of the event's highlights. Despite the slump, Barron has invested an astounding 45% of one of his largest funds in a company's stock, up 41% in early 2021. With the bar, the company enjoys a strong long-term gain. Over the previous 5 years, Parvus funds have yielded an average net analyst return of more than 25%. Barron gave his money back with confidence, pointing to the company's strong growth prospects and buy-and-hold investment approach. He thinks that during the next 10 years, Tesla will surpass all other companies in terms of size and profitability, and his company is among the top 20 largest investors in the electric vehicle manufacturer. Let's hear from none other than Gary Black lastly, as the maker of electric vehicles makes up volume lost to price reductions. Gary Black, managing partner of Future Fund and well-known investor in Tesla, forecasts a sharp rise in the company's sales volume in the first quarter of 2023. He feels that Tesla, as a market leader, has more room to cut its prices than competitors because to its larger gross margin, making it a winner in this price range. Despite a year of setbacks for Tesla stockholders, Black believes that the firm is still undervalued, especially compared to Apple, Microsoft, Amazon, and Google, which are boosting their volumes at 30 to 40% per year. Tesla, which is growing at 35 to 40% per year, should be priced at a greater multiple than GM, Ford, or Volkswagen. According to Black, in summary, investors are optimistic about Tesla's future prospects, with this share increasing more than 50% in the last month has shown significant growth over the years, with a $1,000 investment in 2011 worth almost $200,000 today. The company has ambitious plans to expand into AI and robotics, and investors are hopeful about its future growth potential. However, some concerns remain regarding the company's ability to meet its production targets in 2023 due to supply chain disruptions and COVID-19 related shutdowns. Despite these hurdles, Tesla's recent performance suggests that it will continue to thrive over the long term. If you want to retire from your job by the year 2030, buying Tesla stock is likely the finest decision you can make right now. For more videos about Tesla stock, subscribe to this channel. And if you like this video, slam the like button, and I'll see you on the next video.